Good evening, traders. Welcome to Binary Winners Club. Your presenter to you is Bernard. This is going to be a short video dedicated to those who struggle identifying trends and support and resistance levels to trade in the direction of the trend. And if that is you, join me in this video. Great. I have Euro USD. This is Euro USD, a 5-minute chart. That's what I'm having here. And if you look at the chart I'm having here, I've just added 3 moving averages. We know that moving averages lag, yes, but they can also be used visually to point a trader towards the right direction in terms of following the trend. And you can use 2 moving averages, you can use 3, 4, 5, depending on how you prefer it. I like using 2 or 3 moving averages. And here, I'm having simple moving averages. Actually, these are actually EMAs. This one is EMA 21. This is EMA 13. And the green one is EMA 8. Why? I don't know. Those are just Fibonacci numbers. So I just like using those numbers sometimes. My arrangement is when the 8 is below the 13 and the 13 is below the 21, and all the 3 are pointing down with some reasonable spacing, even spacing between them, then for sure I have a downtrend. When the reverse is true, that is the shorter one. 8 is above 13 and 13 is above 21, and they are evenly spaced, all sloping upwards, like diagonally across the screen, then we have an uptrend. For sure, if you look at the chart I'm having here, you can see an uptrend. Correct? Similarly, if I take you to the left of my chart, we were somewhere here. Let me maybe scroll back like here. You can see the chart is flowing from left to right. Downtrend. And what do you notice about it? The short one is below the medium. The medium is below the long-term moving average, or the longer moving average. Okay, so I want to do some little bit of training, or maybe a discussion on this, so that you know how to use. So number one, you identify the trend's direction. So I have my moving averages. Of course, we know the best way is to use price action techniques of identifying higher highs and higher lows. I still strongly recommend that even as you evaluate a trend using moving averages, which makes your work easier, don't lose sight of higher highs and higher lows for uptrends, lower lows and lower highs for downtrends. Okay, if you don't understand what I'm talking about, for an uptrend, which is this one, the moving averages clearly say that's an uptrend. But how else can I tell this an uptrend? We notice that price moved up, price moved down, price moved up, a short pullback, up, a short pullback, and something like that. I mentioned when we were having a discussion today on our Telegram channel, I think group, that when a trend is strong, you don't see serious pullbacks. These are very minor retracements because a trend is strong. But when a trend is not very strong, you will see significant pullbacks. So this is what I was talking about. A higher high, higher than the previous high, higher than that. So a higher high. This is another high. Probably another high is going to be formed up here. But as you make those higher highs, you are also making higher lows in an uptrend. Higher lows. Okay? They might be minor, but they are still higher lows. If you were to look at a downtrend, then you will notice the same thing, but now in reverse order. Let me pick a nice downtrend. For example, here, you will notice that the market is moving this way. Okay? So the market came from that point, down, went up, down, a minor move, down, a major move to the upside, some small retracements. You can ignore some of these. I'm just drawing them to show you that the market can be moving in weird ways, but still it is using a given you can see a given pattern in the movement. So again, in a downtrend, this is a high, This is a low. So this is a lower. So let me draw another low. The low is lower than this, so we call it a lower low. Another lower low, another lower low, another lower low. In all these cases, we had lower highs. This high is lower than this high lower than this high lower than this high at the same level as this high lower than this. Now this high is happening to be higher than this. So that might signal an uptrend. Again, this low now is no longer lower than this, signaling an upcoming uptrend. And as you can see, the market chose to go the other route. So don't lose sight of this even when you are trading with moving averages, okay? Great. So now we have our moving averages. And what next? Let's see whether we can start trading on this Euro USD M5. This was 25th April. So I don't trade when price is operating between moving averages. I will skip because this is a typical ranging market, and you can see that for sure. That is the sign of a ranging market. All of that, perhaps. Okay. So try to skip and look for a valid setup. When the moving averages start spacing out, which happens around here, they start spacing out like this. I look for a good signal. And let's try one of the patterns that we are familiar with, engulfing pattern, happening near the moving averages, where the moving averages are not too wide apart and not too close together. Like here, they are too wide, meaning it's like when the candlesticks are at the outer side of the Bollinger Band, you expect them to move back in. So this is not a very good sign. I'll show you cases where you will need to consider trades. Now, this kind of variation is good. This kind of gap is good. This kind of gap is good. These kinds of gaps are good. These ones. Not those exaggerated ones. This is good still. But when you see wide ones, like when you see here, that means you don't want to make a trade. Anyway, you take a trade when your pattern forms near the moving averages. Okay? So let's consider engulfing patterns or outside bars. There is an engulfing here. Bearish engulfing, and I wanted to take 3 candles expiry for 15 minutes, which would end somewhere there. Okay, now there is something like an evening star here, you would call. Perhaps it's not a perfect evening star, but even if you wanted to take it, by the time you are taking it, look at it, the other moving average has crossed back inside, and now it's beginning to bulge downward, but they're very close. I wouldn't want to trade. I want to see all of them moving down. So we skip that as a setup. We wait for the moving averages to again bulge again and start showing sign of strength. So here they start expanding. I see a setup there, right? Engulfing. Not a perfect engulfing. There are those engulfings you see and you can trade. Back inside, you see another engulfing. By the time the engulfing closed, all the moving lines were pointing downwards. The beautiful thing for price action traders, you would have noticed that the engulfing also broke the low, the previous low, confirming a breakout. Okay, a breakout to the downside in a downtrend is good. A breakout to the upside in an uptrend is good. Okay, so we carry on. So we move down. Now you are not going to make a trade here. Okay, there is a reason you cannot make a trade here. Why? Price is moving too far. Price is too far from the moving averages. Okay, you can expect moving averages to act like Bollinger Bands. Okay, because even Bollinger Bands are made of moving averages. So when you see price moving far away from the moving averages, expect price to bounce back inside. Okay, so don't do this setup. Try a setup when the candles are touching the moving line. Okay, so price comes back inside, gives us another setup here. Okay, all right, which if you're aggressive, you would enter, but you would lose. And I think the reason, if you're able to analyze the market, basically you could see there was a level there, support that was broken and became resistance. Your candle just hit support. What do you expect? Likely to bounce back up. So let's keep on moving and see. Now we begin an uptrend here, an uptrend. Let's see where we get our first setup. Move on, move on. what is this pattern? This pattern is called a piercing line. Nicely formed on the moving averages. And for 3 candles, that would have landed you an ITM, okay? Then as we move on, now there's a nice setup, but the candle is too long again. This one, I would skip it, okay? I want patterns forming with a candle, part of the candle being inside the moving average. For example here, okay? The candle started from within the moving average. It's not too long, and you can see resistance is far away. If you want to look at the previous level, it has been broken, confirming a breakout. So for 3 candles, that would still give you an ITM over there, okay? So okay. Then we carry on. Let me just move this line to avoid distracting us. Okay, just moving this. So the line starts sloping downwards, meaning now don't try to do a call or a high option like here. Don't. Here, don't. Another nice setup forms right here. A major rejection from the downside. A nice pattern here. 3 candles granting you an ITM over there. We switch to a downtrend. Higher high, a lower high. Now we are moving into a downtrend. What do you notice, friends? Another setup forms right there. Okay. As this one begins to bulge out, there is an engulfing here. Okay. There's an engulfing over there. Then there is still another one over there. Okay. Again, with a nice breakout or breakdown, which would have landed you 2 ITMs in a row if you were that keen to notice this. This is an engulfing far away from the moving averages, would have won, but still don't take trades like this. At least try to ensure the candles touching the moving average. We start an uptrend. What did you notice? First setup here. Well, we'll have granted you an ATM. Next setup is where? Move on. This is a morning star, but I don't like the candle is a little bit away. I want the candle to be inside. This would have won still, but I'm not comfortable with that. But this is a better setup for me, and that would have given me an ITM over there. As you notice, even here, you would have landed an ITM, okay? Because you also broke the highs. So you see, friends, it's not difficult to trade in the direction of the trend, even if you are not a price action trader. You can still use moving averages, but as you can see, adding, price action knowledge in terms of adding a few support and resistance levels really improves your objectivity in terms of picking high quality setups. So for moving averages, that's all. But now I just introduce level 2. We just have that. Now level 2 is when I've introduced automation. Now I have my candlesticks, my own indicator that will give me engulfing bars. Just identify. So in this case, I will not be on the chart. You see, I'll be waiting for a setup. I get a setup here, I look at the chart. I get a setup here, I look at the chart, and I think it's looking fairly nice. I go up. I get this setup going against the trend, I skip. Going against the trend, I skip. Going against the trend, I skip. Against trend, I skip. Against the trend, I don't trade. In the direction of the trend, I trade and win. In the direction of the trend, one thing I notice, I will not trade that. For that reason, the candle has touched support. So I will skip that setup. In the direction of the trend here again, I enter that and win. Against the trend, I don't trade. So that becomes something that you need to be familiar with so that you avoid, trading against the trend, which again can mess up with the trading. Now, to close this video, let me show you how you can enhance that. So from the beginning of the chart, now we have the moving averages. We have the indicator here that will identify these setups. By the way, I've not even optimized the indicator. It simply identifies, engulfing patterns only. My own custom engulfing patterns, not ordinary engulfing patterns, because we define engulfing patterns quite differently. Okay, this is my definition. You can get some these engulfing patterns, indicators out there on the internet. Of course, if you need mine, you can still ask me to send you a copy. Great. So I did add support and resistance from the beginning. These are resistance, which was a support, resistance. This was a minor, what's called, that's what you might call a false breakout. There was a support there. There was another level. So I added these levels from the beginning of the day. And now when I'm trading, I just want to see whether my levels support me. Okay. This would be a counter trend, but against the trend. I do not want to do that. Okay. It's not easy. It's not nice to trade in the direction, opposing the trend. Always follow the trend if possible. So when I get a setup, I check. For example, here we're in a ranging market. Look at the moving averages, messed up. Here we have a nice setup in the direction of the trend. Support level is down below. Okay. And remember, this is an old level. If you look at this level carefully, you will see that it should have adjusted down here. Because as price moves, the levels, buyers entries and sellers entry keep adjusting. So there was quite some sufficient room for a candle to move all the way. So this would be a nice setup for you guys. Now this one, as I said, if you look at it, your buyer's entry was here. So you wouldn't enter setup. Look at this one, a nice break of resistance with an engulfing pattern confirming the movement. If you entered that setup, would be nice. Already the moving averages are realigning themselves. A nice pattern forming here, closing above resistance. We proceed. And of course, with this rejection here, confirmed movement. This one, you would have still drawn your level at that point. Okay. And you would have confirmed that if you wanted to enter this setup, you would enter this setup from here. This one. This major engulfing pattern. Now do realize that I've only used engulfing patterns. There are for sure many other patterns you would still use and try to trade the same market. For example, if I wanted to use an inside bar is a candle inside another bar, a candle. For example, here, okay, this is a candle. This candle is inside this candle. This candle is inside the red candle. So the whole of that pattern is what we call an inside bar, and this is, okay, that's an inside bar. This and this are right inside this other. So when price breaks above that level, okay, when price breaks above that level, which happened here on this bar, then I would consider making a trade starting here, okay, and that would have still given me a win. Then if I wanted to trade another inside bar, I can still show you how to get to trade some of these bars. For example, I will still look for this. This is a red bar. The green one is inside it. The red one is inside it. Then we had a breakout of that inside bar. And that would still have granted you an ITM up there. Okay. There are many options like this. So long as they are starting from inside the moving average. We have a red bar here, followed by a doji inside the red. There's a breakout here. And that would still give you an ITM starting from the candle after the breakout. So guys, there are so many options you can trade under this. So you don't have really like kill yourself. Look at here, this place. Another setup. A green. The red is inside the green. The other red is inside the green. Now we have a breakout below the original, the first green where we started counting from. And as you can see, 3 candles down the line, we are doing well. This could be a nice one, but as I told you, the candle is too big and is stopping at support. Okay. So without making the video too long, I think you understand the logic of what I'm saying. This is another example. This red bar contains the green. The green is small. And when I'm talking about inside, it means high to low. High to low. Okay. The high of this red, the low of this red, this candle, as you can see, is right inside. What happened is this candle broke outside that. 3 candles later, as you can see, would have been a clean ITM if you had entered a trade like that. And these options are quite numerous. There's another one here. This one is inside. This one breaks above it. Okay, you can see it breaks above the red's body. 3 candles later, you guys are ITM. Okay, so I would like to end the video here just to inform you that for sure moving averages can be a helpful tool in your trading experience, and I encourage you, yeah, to use them if you want. If you don't, if you're comfortable with identifying trends with your naked eye using, it's called Dow's theory of higher highs and higher lows and lower highs, please do so. But for me, I like blending. I like mixing price action with, technical or Western indicators, and that's a beautiful thing for me. From you, this was from me. That was a short video to you. I hope you enjoyed it, and if you did enjoy it, remain a subscribed member of our group. This is Binary Winners Club, and your presenter is Bernard. Please be on our Facebook group. Look for Binary Winners Club. If you're not a member, you from our Facebook group, you will be able to identify our Telegram channel. Join us, Telegram group, join us, Facebook page, be there, and let us enjoy this free content together. If you need any of this stuff I'm talking about, hey, leave a comment and send a request. I'll be able to share this with those who are interested. Many more videos coming to you in subsequent days. Stay tuned and share our links with your friends. Let us grow our family. Bye-bye.